Assalamualaikum everyone, we are from Group 3 and today we are going to present about financial statement in 2 years which is 2021 and 2022 that focus for Darby Plantation Berhad versus Boustead Plantation Berhad. Next. Okay, so this is our team members and I will go explain for part A, which is the focus for one company only, Darby Plantation Berhad. And for the first question, does the company pay its supplier on time? And after we analyze, the answer is no, which Darby Plantation Berhad did not pay their supplier on time because the inventory increased 12.57% from 2468197 in 2021 to 2778379 in 2022. In the same time, account trade payables also increased 21.74% from 90892 billion in 2021 to 1096786 billion in 2022. So we will go to the next question. And for the second question, does the company enhance the shareholder wealth? As you guys can see, we analyzed based on share price and dividends of the Darby Plantation Berhad. And the answer is yes, Darby Plantation Berhad can enhance the shareholder wealth because the share price increased 23.67% from 3.763 Malaysia in 2021 to 4.65 ringgit in 2022. Besides, they paid the dividends to shareholders also increased 45.17% from 1066127 billion in year 2021 to 1547736 billion in year 2022. So I will pass to the next presenter.
Thank you, Adlina. So for the third question is, what is the free cash flow of this company show? For the year 2022, free cash flow is 2,188,618 billion compared to 2021, which is 2,045,653 billion. This company shows that their abilities to pay dividend, debt, and the opportunity for them to grow. The decrease or negative figure for free cash flow is not always a bad sign because it's depending to the stage or size of the company. For the next question is, what are the suggestions on the credit terms offered by this company? Darby Plantation Berhad offer the credit terms 7 to 120 days. So by looking at the decrease in accounts receivable by 1.98% and the increase in total sales 2.3% in 2022, the company can maintain or further tighten their credit terms given. Next.
All right, thank you, Jiha. For number 5, what are your comment and suggestion on the profit management? For profit management viewpoint, we can see that from 2022 and 2021, there are decrease around 0.68% due to the lower margin and volume demand. And for question number 6, in your opinion, which stage is this company now? For Darby company, it was an established and at stable stage, but at the same time, for Darby Plantation right now, it's on expansion stage by making connection with other countries. I will pass to the next presenter.
Okay, thank you. For the next question, it's number 7. Does the company need external capital? So how we want to measure by using debt to equity ratio? In 2021, the outcome is 0.7. In 2022, which is the next year, the outcome is 0.64. So the good debt equity ratio will be based on the nature of the company, or which is the stable of the company. So generally speaking, debt to equity ratio below than 1 will be seen relative safe. So whereas value of the 2 or higher, it might be considered risky. So for both here, it's below than 1. So the company does not need any fund or capital from the outside the company. So the next question, which is what happened if the company changes the depreciation method? So for your information, Darby using the straight line method. What if the depreciation calculation method changed to double balance method? So we can see here, if you change to double balance, the values will be higher than straight line method. So it will lead to increase in depreciation, will increase expenses, thereby reduce net income. So next, okay, for the next question, how can the company reduce the tax payment? So they have two methods, which is a changing depreciation method by claiming the allowance. And asset depreciate, businesses can deduct this value from their profit by claiming the allowance, thereby reducing the taxable income. For the next method, which is the employment part, which is using the pension contribution. Making pension contribution can reduce the company's taxable profit, thus lowering its tax bill. So for those methods that will lead to affect the taxable income, it will reducing the taxable income. So going to part B.
Okay, we will meet again. So I will explain and continue for part liquidity ratio, and I will explain for current ratio and quick ratio for both companies, Darby Plantation Berhad and Boustead Plantation Berhad. As you guys can see, for the current ratio of the Darby increased 1.24 times in 2021 to 1.25 times in 2022, while current ratio for the Boustead Plantation Berhad also increased from 0.43 times in 2021 to 0.70 times in 2022. So here it shows Darby Plantation Berhad is better than Boustead Plantation Berhad because a good current ratio is 1.2 to 2 times, which means they had 2 times more current assets than liabilities to cover its debts. So for the current quick ratio of the Darby decreased from 0.76 times in 2021 to 0.20 times in 2022. And for the Boustead, while Boustead quick ratio, they got 0.34 times in 2021, increased to 0.4 times in 2022. So it shows quick ratio Boustead Plantation Berhad is better than Sime Darby because a high quick ratio indicates the company could pay off current liabilities several times over. So I will pass to the next presenter.
Thank you, Adina. Okay, I will explain about Boustead Berhad and Sime Darby Plantation from asset management ratio. For the first one is inventory turnover. This the rate the inventory stock sold or used or replaced. Boustead Berhad, they are decreased from 2001 to 2002 from 16.82 times to 8.62 times. And for Sime Darby Plantation, they are also increased from 2021 to 2022, start from 26.77 times to 63.99 times. And for DSO, the average number of days taken by the firm to collect the payment, they are increased for Boustead Berhad 2021 from 19.09 days to 41.34 days. And for Sime Darby Plantation, for 2021, 56.67 days and decreased to 45.70 days. After that, for fixed asset turnover, it shows how efficient the company is at generate its sales. For Boustead Berhad, they are increased 0.63 for 2022 from 2021 0.55 times. And for Sime Darby Plantation, they are also increased in 2022 from 1.07 times to 1.80 times. And lastly, total asset turnover, total asset or revenue to average asset for Boustead Berhad, it also increased from 0.25 times to 0.27 times. And for Sime Darby Plantation, it's also increased from 0.61 times to 0.67 times. I'll pass to the next presenter.
Okay, for under-debt management, we calculate by using the debt ratio, time ratio, and debt ratio. So for this, debt ratio, a higher debt interest and ratio is favorable because it means that the company presents less of a risk to investors and creditors in terms of solvency. From an investor or creditor perspective, an organization that has a time interest earn ratio, which is the debt ratio, greater than 2.5 is considered an acceptable risk. For both companies, which is Sime Darby Plantation and Boustead Plantation, have debt ratio greater than 2.5 for both here. So it means the company is still stable and have a health position. So for the debt ratio for both companies, a debt ratio of greater than 0.1, which is 100%, means the company has more debt but less asset. But if the debt ratio less than 100%, indicate the company has more asset than debt. For Sime Darby company, which is still stable, which is 0.20 or 20%, means that the company has enough asset to cover debt. But it also came to a Boustead company, also 0.25, but decreasing to 0.2. But it still have a help position, which is the asset can cover the debt. So go to the next question.
So for the profitability management is showing us how well the company generate their profit. So for the operating margin, it shows that how the company can generate profit after we deduct the variable cost. So for the Sime Darby Plantation, it shows the decreased amount for 2022 compared to 2021, which is the current amount is 17.19% compared to 2021, which is 19.82%. And for the profit margin, it shows us how much the net income generated by each ringgit of sales. For the Sime Darby Plantation, it's also show the decreased amount from 18.44% to 12.76%. For the basic earning power, it's also a decreased amount, which is from 2021 from 12.11% to 11.60%. And next, for the ROA figure can give the investor an idea of how effective the company is in converting the money invest into the net income. So from what we can see for ROA, it shows that the amount is increasing from 8.21% to 8.61%. While for the ROE, it also show the increased amount from 13.95% to 14.11%. However, from the analysis of profitability, we can see that Boustead ratio is increasing. However, the profitability is depending to their company size, which Boustead Plantation is a bit smaller compared to the Sime Darby Plantation Berhad. Next.
So I will continue for the market value, which is PE ratio for both company, Sime Darby and Boustead Plantation Berhad. As you guys can see, price or earning ratio of the Sime Darby increased from 0.12 times in 2021 to 0.13 times in 2022, while Boustead Plantation Berhad got 0.06 times in 2021, decreased to 0.02 times in 2022. So it shows the Sime Darby is better than Boustead Plantation Berhad because a higher in PE ratio means that a stock's price is high relative to earnings and possibly overvalued. So I will pass to Nasrul.
For the ratio, we use to calculate current market value its book. So for Sime Darby company have a greater MB ratio, greater than 1 MB ratio, which is the stock is overvalued, which is the company has performed well. But for MB ratio, they are less than 1, which is they indicate that the stock is undervalued, which is the company, the Boustead company, is not good in investment, which is the investment situation are bad. So next.
What is the effect of the debt on ROA and ROE on the company? So it shows that when the high debt can reduce the amount of ROA and ROE. So when the debt is increasing, the amount of interest that must be paid is also increased. So when the interest of interest is increasing, it will reduce the profit. So it will affect. So it shows that when the profit decline, it can affect the ROE and ROE, which is both of the ratio is also decline. Next, I will pass to Adlina.
So for the second question for part B, what are the ratios that needs to be improved? So based on we analyze quick ratio, we need to improve quick ratio, inventory turnover ratio, DSO, operating margin ratio, basic earning power ratio, P ratio, and MB ratio. That shows the bad result for the ratios. So we decide to improve one ratio compared to all of the ratio, which is we need to improve the quick ratio because it is better indicator of the Sime Darby ability to pay their debt based on the measurement of the Sime Darby liquidity in terms of the cash that Sime Darby have available. We also need to improve profit margin of this Sime Darby by eliminate all unnecessary operating costs and boost their gross profit margin. So yeah, that's for my part. I will pass to the next presenter.
All right, thank you. For question number 3, how can the company show additional debt? There are 3. For the first one, increasing operating costs or high energy costs. So they can implement a hedging strategy for gas and use this as an alternate food. And number 2, increasing operating costs also from raw material price. So they can close monitoring of global raw material price to ensure accurate budget costing for every project. And the last one is increased financial costs. Raising interest rate, so they can permit derivative instruments such as short-term interest rate swap are considered to ensure that the group is protected against the risks of the adverse interest rate movement. Okay, I will pass to the next presenter.
Okay, thank you. For the last question, in your opinion, what is the potential of the use of the cash for this company? So first, it should be investing in research and development to improve their products and services in the business operation, running asset, or paying off debts to reduce expenses. Second, it can invest in employee training, which is they can improve employee skills and productivity, which can lead to increased and profitability. So for the last, this is the pay dividend to shareholder. It can help attract new investors and improve shareholder value.